Hi, thanks for tuning in. This is the US Futures Weekly Chart Analysis for the week ending 1st of December 2023. First chart is the US Dollar Index Futures, as usual. You can see that the market has made an attempt to draw out support this week. If we put in some lines, here's the old highs of the range come through here, and price did break down below that level here. The next level was adjacent to these two bars that traded next to each other. It comes through there and the lows. You can see where the market's attempted to find support in here now. The level below that comes through here. So this market has attempted to find some support. It's perhaps not completely convincing, but it's certainly a start. The market dipped lower and then recovered to close almost adjacent to the previous bar's close. And that recovery will have put some of the associated markets under some pressure and given them some headwinds to face. You would normally expect a market to respond positively to this sort of bar, particularly if it had lower volume, but volume was actually increased and back up to the average this week. So the most likely outcome may be a secondary test for supply like this, but we'll have to wait and see. Next chart is the E-mini S&P. This is S&P 500 index futures. Volume recovered this week after the shortened trading week the previous week, although it still remained slightly below the average overall. And that perhaps accounts for the relatively narrow spread, despite there being increased volume. Price did get up to trade adjacent to the 4,600 level, which I've been suggesting is a likely outcome over the last couple of weeks. It wasn't a particularly convincing bar this week, and it may suggest that this market does trade sideways for a little period here and attempts to consolidate rather than continue higher. US Treasury 10-year note futures really accelerated higher this week. We've been looking at the market through here, pushing up, consolidating, pushing up, consolidating, and now the market has really accelerated this week, and I would probably expect some form of consolidation in response next week, similar to what's happened previously here. Now, you'll be able to get a measure of the underlying strength of this market depending on the amount of spread and the actual position of the close. So if you get a very narrow spread and a high close, it'll be considered much stronger than a wider spread and a low close, which suggests the market would be under pressure to consolidate. So this was a strong move, and price has done a good job. The spread wasn't particularly wide this week when you consider how much volume was actually drawn out. And this wasn't changeover volume for the change of contract, which is here. This was traded volume, and it was pretty high, really high. And spread was increased, but not particularly wide considering how high the volume was. So that really does show you clearly that supply was being drawn out, and that's understandable. Price had to push through this congestion to the left, which had caused issues previously, and it even popped its head up to this even stronger level above that. So there was going to be supply being drawn out. There was, and the market's been forced to absorb that as it pushed higher this week. So watch the response next week, and you'll get a good indication of the underlying strength of this market. Copper price futures. Copper price futures really accelerated higher late in the week. The lows of the range come through here. This was where the market built up some strength just in the shadows of this lows of the range here. The next level higher sort of comes through here it's a little bit of a wider zone of resistance here, and the market's pushed right up to that level this week. The next level comes through here like this. So you can see the price is clearly pushed right up to the lows of the next level or the highs of this range, depending on how you want to look at it. And that's a pretty good move, considering while volume was increased, it wasn't overly high, considering there's plenty of volumes that are higher recently. So it was good, strong volume without being ridiculously high or at least too excessive. It looks sustainable. So that was a good move up. You'll almost certainly see a test for supply and some consolidation next week. And if that proves that selling pressure is low, it'll leave the opportunity for this market to push higher in response. If supply is drawn out, you'll get a deeper pullback and you'll probably get an ongoing period of consolidation prior to any serious attempt to push higher. Gold price futures also accelerated higher this week. And remember that copper and gold have accelerated higher while the US dollar recovered. That would normally put these markets under pressure, but it hasn't done so. These markets have accelerated higher despite the late strength in the US dollar late in the week. And that's a sign of underlying strength in those markets. And for that case, the 10-year note also pushed higher despite that strength in the US dollar. So gold, the lows of the range come through here. You've had a little bit of shaking out of those lows, which recovered both times quite strongly, and that's showing you strength in the background. And price pushed up higher in response to that strength, came back and tested, and now it's accelerated higher again. And this was a really strong move. Volume was very high, one of the higher volumes on the chart. And that's understandable with price pushing higher as it did. But you'll probably see the market consolidate at least for a little period in response. That's the general response. Whenever price accelerates high like this, especially in a relatively short period of time, supply will be drawn out. Selling pressure will be drawn out. There'll be profit taking. There'll be people thinking that the market's gone as high as it's going to go in the short term, and they'll be shorting it from above. And that will be supply being drawn out. And if this market really is truly strong, it needs to absorb that weakness, that selling pressure. And in doing so, the market will generally test for supply. It'll pull back and consolidate and attempt to absorb that supply that's been drawn out. And that's what I expect will happen in response to this week's strong move. Silver price futures also accelerated higher this week. The lows of the range come through here, and you can see that price has clearly broken out. The next level comes through there, sort of like that. And if you look carefully, I'll put it in a different color, you can see that there's a little gap through there. That's a real professional move to gap over resistance. Here was the resistance level, gap over that, and then accelerate higher. And that's a way of trying to avoid too much supply being drawn out. It gives the impression the market really is going to accelerate higher. Anyone who is going to take a profit is encouraged to hold on for a bit longer and enjoy the ride. And people who are shorting it keep on getting stopped as they're shorting it at different levels. As price moves higher, they're getting stopped out. And that makes them reluctant to continue shorting it. So it's a way, gapping up like this is a way of avoiding supply, at least in the near term. Now, this was a pretty good push higher, a little gap up like that. Volume was very high. Spread wasn't quite as wide as in the gold market, which does show you that supply was being drawn out. And that'll probably guarantee that this market will need to consolidate, test for supply, and absorb sideways to solidify its position in this new range above. The new range probably goes through there like that. So that's what I would expect next week, a period of consolidation in response. You may find with a lot of enthusiasm in the market that price does attempt to push up. It's unlikely to make any serious challenge to the 26. It'll push up, the momentum will fade out, and then price will go into a little period of consolidation in response and trade like that. And the higher price trades within this bar's range, or perhaps within the lows of the range here, the higher it trades as it consolidates is a way to judge how much underlying strength remains in this market. If the market only pulls back moderately and is able to complete its consolidation right up high in this week's bar's range, right up here, then it's much stronger than if price has to pull all the way back to the lows of the range before it can recover. Like crude price futures have been very inconsistent lately, difficult to read, and I can't really explain exactly why this has been the case. It's not been good. It's been a difficult market, and it's been illogical at times. Anyway, the market's attempting to find support on top of this zone of congestion here to the left, and it was doing a good job, and it attempted to push higher in response this week, which was a legitimate and logical response to the previous 3 bars of consolidation, but it closed really poorly in the end late this week. Volume wasn't particularly high either. It makes the market appear weaker than it seems to be, but I can't put my finger on exactly why it's trading so inconsistently at the moment. The way the market closed this week suggests prices coming back to the $70 mark, and we'll just have to see how that works out. I was more of the opinion it was going to move back towards the $80 mark, but the poor close this week on not particularly strong volume suggests that's not going to be the case. Euro US dollar currency futures. You can see that the strength in the US dollar later this week really put this market under a bit of pressure. Here was the lows of the range, the breakout above it. Price came back with a very narrow spread, suggesting that selling pressure was weak. This was the consolidation, very narrow spread, as I've mentioned for some of those other markets, which allowed price to accelerate higher again. And here's the little shelf to the left. Price moved up to that last week, attempted to continue higher, but the strength in the US dollar later in the week has forced this market to move back down, and it's closed back just below this shelf. So no serious damage done yet, but it perhaps closed a little more weakly than you would imagine. It certainly wasn't strong, and if that weakness continues, I'd expect price to come back to this level and test it for strength. If the US dollar suddenly weakens again, I expect this market will recover and close back up near this range. So watch how the market opens next week. Keep an eye on the US dollar index futures, and you'll get a good indication early in the week how the market's likely to trade later on. British pound currency futures. Lows of the range come through here. Here was the breakout above and the consolidation in response. Price pushed out again. That shelf comes through there, and price pushed up. It wasn't as strong as the euro last week, but this week, although spread has narrowed due to the strength in the US dollar, I imagine, volume increased, price continued high. So this week at least, price has traded a little more strongly than the euro, and it remains up at this shelf in the background. So that was a pretty good response. The lower levels here I expect the market will attempt to test for supply here next week, do something like that, perhaps not with quite that amount of spread. Aussie dollar currency futures. It's been a bit of a messy low down here. It's understandable when you put in the longer term lows. You can see price attempted to consolidate on top of this level, and it just dipped into it a little before it found some more support. Price pushed out and above and has accelerated higher, consolidated, pushed up again, and now it's back within the old sideways trading range, which sort of came through here. This was a strong response considering the recovery in the US dollar late in the week. So that was a good effort. Volume wasn't particularly high, so it certainly wasn't excessive. This looks a little more sustainable than any moves more recently. I would expect a little bit of consolidation at least early in the week, more like this, and then a response depending on, one, how the US dollar is trading, and two, how much supply is actually drawn out. If the US dollar is neutral or weak, this market will probably continue higher. If the US dollar is neutral or strong, but supply is being drawn out, you may see the lows of the range tested for strength prior to any attempt to move higher. Bitcoin futures. Bitcoin futures are trading almost exactly how we suggested. There's anticipated supply being drawn out from the left over here. Now, just to put the chart together quickly, there's a period of potential accumulation back here. Price pushed out. Highs of the range come through here. Highs of the next higher range go through there. This was a period of consolidation after the market broke out from this accumulation zone. Prices pushed up to this next higher zone through here. There is anticipated to be supply being drawn out from the left, and that's what the market's encountering. You can see the market's really grinding its way through this level. If you look on the daily chart, you can see a really clear example of bullish absorption taking place live in the market. And bullish absorption, the characteristics that describe bullish absorption is a pressing nature towards the upside. And that's exactly what the market's doing. You see clustering of closes at a similar level, like this. And you also see threatening down bars, which see no serious downside follow through. That's happened numerous times here. Threatening down bars that look like the market could break down, but almost every single time the market is up in response. You get an up bar in response almost every single time. And this is a characteristic that clearly defines bullish absorption. And that's exactly what's taking place here in the market. Back to the weekly chart. So that makes sense, I think. You've got accumulation in the background, period of consolidation following a breakout through here. You've got an acceleration up to the next higher level, which begins here. And now the market is having to grind its way, absorb its way into this zone because there's supply being drawn out from the left. And I expect that will need to continue for some time. I think getting towards the 40,000 level, the supply gets even stronger as price moves higher. So you'll get some down bars, you'll get some up bars, but you'll get a grinding fashion and a pressing nature towards the upside. That might ease off if price successfully gets above 40,000, and maybe that the angle of incline may steepen a little bit. But there's still more supply to be drawn out yet, and that's more supply, selling pressure that needs to be absorbed by the market if it's going to continue higher. And at some point, you'll probably find the market gets pushed back a bit, like this, and then has to recover again like that. So it's probably not going to be plain sailing. There's going to be some ups and downs, but if overall the market continues to grind higher, the bullish absorption phase is likely to be successful. And just back to US dollar index futures quickly to finish up. Draw the chart in. It's been a pretty good chart to follow. Mostly logical and mostly understandable, which is exactly what you want. You can see the market is attempting to consolidate adjacent to these two bars here, where there was some consolidation in the background. The highs are defined by this breakdown here, which caught this level, caught the market here. The market consolidated before it accelerated higher. So it's a good logical position for the market to make an attempt to consolidate. You would normally expect the market to push higher in response to a bar like this, but you may see this market, which has weakness in the recent background, put in another test for supply, a consolidation bar, before any serious attempt to push higher occurs. If the market just tries to accelerate higher, it'll probably fail. If the market puts in a period of consolidation sideways, it's more a chance to be successful and sustainable response higher if that's what the market's going to do. And there's always the chance that this is just an attempt to consolidate and it eventually fails. You get a bar like this in response, and then price comes down to the next level lower, which is between 100 and 102 in here, adjacent to this trading here to the left. So watch what happens early in the week. You'll get a pretty good indication of what to expect as the week goes on. Okay, thanks for your time. That's it for the week. See you next week. Thank you. See ya.